Robinhood decided this about NIO stock, and this is why NIO will hit $1,000. Robinhood had made another decision for NIO. The decision was thought to change the course of NIO, but is it going to happen? And how will it change the fortune of NIO? Let us get a detailed analysis. Hello friends, welcome to Stock Market News. We are back here with an amazing story that would blow your mind. So, if you're in the stock market, you would definitely hear the name of NIO and how it is impacting the overall stock market. Now, it has enrolled its name in Robinhood's best stock list. But what has Robinhood decided about NIO stock? Let us go through all these things. So, what are we waiting for? Let us start with the video. Before starting with what Robinhood had to say about in this video, let us first understand what Robinhood really is. It is abundantly clear that Robinhood has positioned itself to be ideal for younger investors who want to get skin in this game, even if this means positioning themselves to invest in small quantities through fractional shares. They have more than 13 million users, and the average age of these users is 31. The Robinhood app and website are both straightforward to navigate due to the overall simplicity of the platform. Robinhood can assist you in getting started with cryptocurrency, investing if you have an interest in doing so. You will be able to trade cryptocurrency such as Bitcoin, Ethereum, and more using their platform. As a result of Robinhood's expansion of its options trading platform, a broker is now a viable option for traders of options, despite the fact that there are some concerns regarding the quality of trade executions. When it was just getting started, Robinhood quickly established itself as a leading innovator in the brokerage industry. The absence of commission fees for trading stocks, options, and cryptocurrencies was the company's most significant competitive advantage. Because the vast majority of the brokerage industry has now eliminated commissions, this advantage is no longer present. Robinhood has developed a strong brand and niche market with young, tech-savvy investors thanks to a clean design and user experience that focuses on the fundamentals despite increased competition on cost. This has enabled Robinhood to compete successfully in this market. In an effort to broaden their customer base and strengthen their existing clientele's financial ties to the company, the broker has recently introduced cash management services as well as a recurring investment function. Despite the fact that the number of customers who use Robinhood has increased dramatically over the past few years, the success of the company has resulted in increased scrutiny. The platform has also been criticized over the past year for unscheduled outages and intentional trade restrictions in the midst of volatile market conditions. Because of this, many people began to suspect that there was a conflict of interest, which in turn led to the filing of class action lawsuits and attracted the attention of politicians. As part of our investigation into Robinhood and whether or not it is suitable for your investment portfolio, we will delve into some of these topics. NIO has made its rank in one of the highest lists of Robinhood, and an expectation has been made by Robinhood that NIO will hit $1,000. Although this is not the first time that someone is speculating about NIO stocks, getting the approval of Robinhood is really an extraordinary thing. Well, if we look at the graph of NIO and how it is performing these days, we got the following results. NIO stock trades for just 3 times the amount that analysts anticipate it will earn in 2022, which is $10 billion, given its current market value of $29.91 billion. According to the statistics found at Morningstar, this represents the most affordable price-to-sales multiple that NIO has ever had. According to Seeking Alpha, Tesla trades for 10.5 times this year's sales forecast, which is significantly higher than most other companies. Tesla is significantly further along than NIO, and as a result, it justifiably merits a higher PS multiple than NIO. It would appear that a valuation of NIO stock that is 5 times the company's sales could be a more appropriate valuation. This would mean that NIO's value for the year 2022 would be $50 billion, i.e. $10 billion multiplied by 5 times PS. This is still 67.2% higher than its market value of $29.9 billion as of March 9th when it was measured. Based on the price from yesterday, this indicates that the NIO stock could be worth as much as $33.72 at its highest point. The consensus among analysts is that NIO stock is still a buy. Seeking Alpha polled 25 industry experts and found that their average valuation of the asset was $52.92. At its current price of $20.72, this signifies a potential profit increase of 162% for the buyer. The same can be said for the tip rank system. According to tip ranks, the 13 Wall Street analysts who have commented on the stock within the past 3 months have set their average price target for the stock at $52.59. That's an increase of 160.7% from where we started. My price target of $33.72 per share is significantly lower than the optimism shown by these analysts regarding the stock. They are unanimous in their opinion that NIO stock is grossly undervalued and that it will soon stage a recovery. NIO made the announcement not too long ago that it will be listing its stock on the Hong Kong Stock Exchange. Today was the first day that the stock could be traded using the symbol 9866. This gives shareholders an alternative option in the event that shares are ever delisted in the United States. This latter possibility could be one of the reasons why the stock is so inexpensive to begin with. Perhaps with the help of this strategy, NIO stock will be able to achieve the higher valuation that it justly merits. In the next couple of years, NIO is expected to grow to the point where it can make money. This is the key catalyst for the stock to re-rate in the middle term. During the company's investor call for Q4 2021, NIO said that it expects to break even or be profitable for the full year in 2024. This is in line with what most sell-side analysts expected, according to S&P Capital IQ. Sell-side analysts think that NIO will grow the company's revenue by plus 51% CAGR from RMB 36 billion in fiscal 2021 to RMB 187 billion in fiscal year 2025. Due to economies of scale, it is expected that NIO's reported gross margin will rise from 18.9% to 22.4% over the same time period. Since there is only one analyst who makes estimates, financial predictions for 2026 and later are not taken into account. In particular, the sell side expects NIO to turn around from a non-GAAP adjusted net loss per share of minus RMB 0.52 in fiscal year 2023 to normalized earnings per share of RMB 1.48 in fiscal year 2024, before jumping by 906% to an adjusted EPS of RMB 14.93 in fiscal year 2025. But there are risks that could make it take longer for NIO to start making money. NIO is always focused on the high end of the Chinese electric vehicle market. If the company's sales are going to grow as quickly as the market expects, NIO needs to be able to break into the mass market. NIO has already planned to launch the company on full page, and recent analysis shows that it will grow sooner, even surpassing Tesla and other EV companies. Though it would take time because NIO stocks keep on fluctuating for this time, and it needs a booster to launch for a full-phased mass production company. To beat other companies, NIO has planned to launch cars in the range of $30,000 to $50,000. It means that these cars will be meant for the larger middle class, and features will be similar to Tesla and other big companies. It would give a booster dose to the company because as of now, Tesla is producing only high-range cars. The NIO development might work as a revolution. NIO is planning to bring this change all over the world. It only depends on the success of NIO, which would be the next grandmaster in the field of EV companies. So, this was the overall report of the NIO company. To summarize, we can say that investing in NIO would be a good option at the present time. Though graphs are showing that the overall production of the company is low, recent rates are showing that it will grow soon. That is all for this video. If you liked it, do not forget to hit like and subscribe to the channel to watch more videos like this. Also hit the bell button to get the latest notification. And thanks for watching!